You ever see it? That trading strategy that just looks perfect on paper. I mean, a backtest so flawless, it feels like you found the holy grail. It's what every trader dreams about, right? But more often than not, it's hiding a really nasty trap. Today, we're going to expose that trap and show you exactly how to sidestep it. All right, so let's set the scene. Imagine you've been grinding for weeks, maybe even months, building this new automated strategy. You pour everything into it, you finally hit run backtest, and wow, the result that pops up on your screen is it's pure magic. It looks just like this. A beautiful, smooth line just climbing from the bottom left corner straight to the top right. You see almost no losses, no scary drawdowns, just one win after another. You feel like you've finally done it. You've cracked the code. This is the money printing machine you've been looking for. The feeling is absolutely intoxicating. And that's the big question, isn't it? I mean, looking at a chart like that, why wouldn't you be ready? You're probably thinking about quitting your job. But here's the brutal reality. The second a strategy like this hits the live market, it doesn't just stumble. It completely implodes. We're talking catastrophic failure, sometimes wiping out an entire account in just a few days. So what on earth went wrong? Well, that kind of disaster, it's not just bad luck. It actually has a name. Think of it like a diagnosis for a very common and very dangerous sickness that infects so many promising trading strategies. And the diagnosis is this: curve fitting. You'll also hear it called overfitting. This is what happens when you tweak and tune your strategy so much that it perfectly explains the past, but has zero clue about the future. It hasn't actually learned a real repeatable market pattern. Nope, it's just memorized a bunch of historical coincidences. And this right here gets to the absolute heart of the problem. A good, robust strategy is designed to find the signal. That's the genuine, repeatable pattern in the market. But a curve fit strategy gets completely fooled by the noise, all the random flukes, the one-off historical events that are never, ever going to happen in the exact same way. Your job, your entire job, is to figure out how to tell these two apart. Okay, so how can you spot this sickness in your own strategies before you risk real money? Well, just like a doctor looks for symptoms, we can look for some really clear warning signs that a strategy might be curve fit and, totally fragile. Let's run through these symptoms. First up, extreme parameter sensitivity. If you change your moving average from, say, 14 days to 15 and your entire strategy just falls apart, that's a massive red flag. Next, those perfect results. Look, real trading has bumps in the road. A backtest with an 80+% win rate is almost always too good to be true. Then there's the high profit factor that comes from thousands of tiny little trades. That often means it's not capturing a real edge, just exploiting some weird quirk in your historical data. Another big one, it only works on one stock or one specific time frame. A good idea should work elsewhere, at least a little bit. And finally, overly complex rules. If your strategy reads like a novel with a dozen if this, then that conditions, you're probably just describing the past, not creating a tool for the future. Which leads us to this simple, powerful rule of thumb, the number 4. If your strategy has more than 4, maybe 5 adjustable parameters, all those little knobs you can turn and tweak, the odds that you're curve fitting just go through the roof. Every new parameter you add is another opportunity to perfectly match the noise of the past, making your strategy more complex and, believe it or not, way more fragile. All right, enough doom and gloom about the problem. Let's talk about the solution. How do you actually build healthy, robust strategies that are basically immune to this disease? Let's call this the prevention plan. So here's your 4-step vaccine against this whole problem. Step 1, reserve some data. Always, always hold back a chunk of your data, like 20 or 30%, that your strategy development has never seen. This is like the final exam. Step 2, test parameter ranges, not just one perfect value. A healthy strategy should still work pretty well with a 45-day moving average, a 50, and a 55, not just at one so-called magic number. 3, keep it simple. Seriously, fewer rules, fewer parameters means fewer chances to accidentally fit to random noise. And finally, number 4, use cross-validation. This is just a fancy way of saying you should test your strategy on different slices of your data to make sure it works consistently, not just during one weird market period. And if you really want to build a rock-solid foundation, you add these 2 final pillars. First, test your idea across similar markets. If you've got a killer momentum strategy for Apple, it should show at least some sign of life on Microsoft or Google. And maybe most important of all, focus on a logical edge. You have to ask yourself, why should this actually work? Is there a real economic or human behavior reason behind it? If you can't answer that, you might just be chasing a statistical ghost. You know, after all the techniques, all the tests, it really all comes down to one simple, powerful guiding philosophy, a trader's golden rule that can save you from a world of pain and financial loss. And this is it. Simple is robust, complex is fragile. Burn that into your brain. In the world of trading strategy development, complexity is your enemy. It's what creates fragility and opens the door wide for curve fitting. The strategies that actually last, the ones that make money year after year, they're almost always based on simple, elegant, and logical ideas. So as we wrap this up, I want to leave you with one final question. I want you to go take a hard, honest look at your own work and ask yourself this. Is my strategy just a complex machine that's really good at remembering the past? Or is it a simple, robust tool that's actually ready for the future? The answer to that question could make all the difference in the world.